Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video, not only because I'm finally back from my 2-week vacation, but also because the scenario we've been discussing and preparing for months now is finally starting to play out. And as a quick reminder, since it's been a while, my last video was Saturday morning 2 weeks ago, right before Trump was supposed to speak at the Bitcoin conference, and Bitcoin was trading at about 68,000, and everybody was drawing arrows to the upside, saying we were about to break out and go straight to 100K and kick off the super cycle because the leading presidential candidate was going to announce Bitcoin as a reserve asset for the United States. But of course, we had major concerns this was going to be a sell the news event like just about every other crypto conference, especially when we have such high expectations going into the event. And we also had the additional confluence of Bitcoin seasonality and how in the summer Bitcoin tends to be very choppy outside of those post-halving mania years like 2021 and 2017. And I even left these drawings in from the last video where we said that Bitcoin always has a pump and then retrace going into August. And if you look at what happened after that conference, we had a nice rally going into it, everybody getting super hyped saying this time is different. It's going to be a bullish summer this time around. And of course, price just ends up chopping around and retracing, baiting in all of those leverage longs and wiping them out with a huge liquidation cascade to the downside. And of course, you can't even see the huge wick down to 50K here, but we ended up seeing that full pump and retrace that we tend to see from Bitcoin every single summer outside of those post-halving years. And of course, our final main point of concern was the bearish engulfing candle we saw on the S&P 500, the first one, in fact, since the end of 2021 when we had our local top back then. And of course, everybody was ignoring this because they were focused on the Bitcoin conference, but we said that we were seeing some follow-through on that bearish engulfing candle, which wasn't great for Bitcoin bulls in the short term. And of course, we ended up seeing quite a bit of follow-through on that sell-off for the S&P 500. Nothing crazy quite yet. We are trying to reclaim that 20-week moving average. But of course, when you see this type of sell-off in traditional markets like the indices, like the S&P 500 and the NASDAQ, it's no surprise that Bitcoin would have an even larger sell-off if that were to occur for traditional markets. And that, of course, brings us to where we find ourselves today. Bitcoin ended up seeing almost a 30% correction after that Trump speech at the Bitcoin conference. We had a very strong bounce off of that 50K round number with the confluence of the 50-week moving average, but then we got rejected on the retest of this lower part of the range. So it's really hard to be bullish until that gets reclaimed. Until we end up reclaiming that 61K level, it's a lot more likely we see prolonged chop and consolidation throughout this month of August, which historically isn't great for Bitcoin. But of course, the question on everybody's mind is, was that the low, or are we still going to see lower prices and more downside before the next rally? As for how low Bitcoin could go in this correction, back when I made this chart a few months ago when Bitcoin was trading at 70K, and I said it was very likely we'd revisit 60K and very possible that we would revisit the low 50,000s. A lot of people said that was impossible and we would never see Bitcoin below 60K again. And price is just going to take off from here the same way they said it would take off from this high and this high and this high. And of course, they just keep calling for that huge rally and breakout while Bitcoin is in a very clear downtrend and consolidation that's likely going to take a lot longer than most people expect before the next major move to the upside. But of course, now that we've hit my possible region, I still think it's very unlikely we see the low 40Ks, even though it's almost consensus now that we're going to go there. Everybody thought it was impossible to go this low just a few months ago, and now everybody is convinced that it has to happen. But for me, I still think it's unlikely, which is why I think it's such a good buying opportunity if we do get there, and that is where I plan to add exposure if we do end up getting that low. But if we don't, and this possible region was the low for Bitcoin before the next rally higher, I'm just going to sit on my existing positions and ride them back to new all-time highs with the larger cash position that I have now, as I've documented with my Ethereum sales over the past few weeks. And of course, this is the normal cycle scenario we've been discussing for quite a while now. We were open to the possibility of a left translated cycle where, because of the ETFs and all of the excitement, maybe Bitcoin rallies into November and peaks in the first half of the cycle. But as we said many times over, the normal cycle was a lot more likely because the market really felt ahead of itself when we made that early all-time high before the halving, and it felt like we had to shake out a lot of short-term investors and short-term traders, liquidate a lot of leverage, chop up a bunch of people in both directions, which of course is what we see just about every summer for Bitcoin. And now it looks like that's exactly what we're getting. The people trying to catch every single bottom continue to get punished over and over, the same way that people that keep trying to short the market before every bounce lose money over and over again as well. So it's still a lot more likely to me that August is relatively choppy. Same thing for September. And with all of this election uncertainty, ever since we had the president of the United States drop out of the election race just 3 months before the election deadline, and of course now we're seeing some pretty close odds for the presidential election winner between Trump and Kamala Harris. And we know that markets hate uncertainty because maybe there's going to be different tax rules depending on who wins, or maybe the market views Trump as the more favorable crypto candidate. So anytime Kamala Harris goes up in the odds, that makes crypto sell off because she may not be as crypto friendly as the other candidate. And of course, these election odds tend to cause a lot of uncertainty, which traditional markets and markets as a whole absolutely hate. And I think it's one of the main reasons we've seen the sell-off in the S&P 500 recently. And this is actually something very normal in presidential election years. From July to November, when the election actually occurs, you see increasing volatility each month as that election gets closer and closer. And for some reason, this feels like one of those especially uncertain elections, at least the most uncertain one that I've seen in my lifetime, in terms of a candidate dropping out 3 months before and getting replaced almost instantly and the odds flipping back and forth. So it's no surprise that we see increased volatility going into elections anyway. And then we see even more volatility this time around because of the specific uncertainty of this election itself. And of course, as if the election uncertainty isn't enough, we also have quite a bit of monetary policy uncertainty with the rate expectations flipping back and forth based on the latest data. And of course, we have to discuss this very pivotal unemployment rate print that we had about a week ago, where the unemployment rate came in at 4.3%, a pretty large jump over the 4.1% print from the prior month. And it really looks like this is starting to enter a bit of escape velocity here, as we've been warning for almost half a year now. And you can see these breakouts in the unemployment rate almost always result in a recession, and it's hard to say this time is going to be different when we look at how this current breakout looks and how we're starting to expand away from that 2-year moving average, something that has resulted in a recession each and every time over the past 30 years. And of course, this is a result of inflation being elevated and the Fed elevating rates to bring down inflation, but that of course has been weakening the economy slowly, and especially the labor market. And when we get these rate cuts and what kind of impact they're going to have is also incredibly important for risk assets. But right now, recession fears and labor market weakness is definitely something that's negatively impacting markets, because the market wants those rate cuts to come sooner, but not because things are breaking and collapsing. Ideally, we would have wanted to see those rate cuts because inflation came down before we saw all of this labor market weakness. And that's why these rate cut expectations and the Fed's monetary policy is so important. So for now, we really have no choice but to remain conservative and patient. We still haven't seen that aggressive collapse below the range for the US dollar index, or that breakout to the upside of the range that we've been in for almost a year and a half now. And of course, this is important because the dollar index has to be in a prolonged downtrend for Bitcoin to enter those huge mania phases that we're all waiting for and hoping for. And of course, that's what's required to see those alt seasons as well. I've seen just about 1,000 calls for alt season over the past 12 months, and those people have been wrong every single time because the conditions for alt season are not here yet, and way more money has been lost in anticipation of alt season than just holding Bitcoin or a more stable asset and waiting for the correct time when it actually makes sense to go further out on the risk curve. This is also why I've been selling a bit of my Ethereum leading up to that ETF launch. Just as a quick reminder, I believe my first sell was at about 3,200 and I sold some more at about 3,400. And then Ethereum went on to drop about 35 to 40% since that sell. And it's nice that we've seen a strong bounce off the 20-week moving average, a level that we haven't spent a lot of time below and has been support when we've gone down and tested it. But as of right now, it's a bit too early to confirm this as a local low, and I would expect quite a bit more chop and consolidation, maybe even a retest before Ethereum can recover and go higher, because I think the market is still digesting all of the excitement and hype that we had leading into this Ethereum ETF launch, just to see those grayscale outflows completely collapse the market. And of course, we saw something similar with Bitcoin's ETF, but the inflows on that one were a lot larger and were able to absorb a lot of those grayscale outflows. But with Ethereum, that hasn't really been the case, and the outflows have just been completely outweighing the inflows because people are actually pulling money out of Ethereum and not just rotating to lower fee options like they were with the Bitcoin ETFs. As for Solana, pretty interesting price action as well. Finally fell below that multi-month trading range and then quickly reclaimed back above it. Definitely the best looking chart between Ethereum, Bitcoin, and Solana is Solana as of right now. But of course, this is going to be driven by Bitcoin. And you could say that after that quick reclaim, we just came up and got rejected by the mid of the range and we're ready to roll over once again. But of course, Solana's price action is too driven by Bitcoin to try and do some analysis on Solana itself without taking Bitcoin into account. And until we can see Bitcoin reclaim that range that we lost this week and get back above 61.5K, I'm a lot more inclined to expect more downside and further corrections and consolidation instead of some immediate V reversal recovery rally that everybody is calling for on Twitter and YouTube now, which is why I remain relatively cash heavy, especially for people in this space. Saying that you hold any cash whatsoever is almost blasphemy at this point, where it sounds like the dumbest thing in the world and cash is trash, but I have felt incredibly comfortable throughout this summer of chop and money being lost in altcoins by having a relatively heavy cash and Bitcoin portfolio and waiting for the type of conditions that actually provide serious opportunity in altcoins and potential upside in this market. And the type of seasonality we're seeing with the summer, the type of seasonality we're seeing with it being an election year, and all the economic weakness and monetary policy uncertainty is not the time to be 100% risk on, in my opinion. And that's why I've been relatively conservative, even though it's gotten me the label of permabear sometimes when I have taken profits or been a little more cautious when everybody has been euphoric because of a conference or an ETF launch. But of course, as I'm sure you're all well aware, I'm incredibly bullish Bitcoin in the long term. I still think we're comfortably in a fair value region. You're not buying Bitcoin at an amazing discount by buying at these prices, but you're also not buying at incredibly overvalued prices either. So for now, I'm just sitting on my hands and being patient. And it's nice to see so much supply being taken in by these ETFs and off the market. And if this trend continues, I think it'll be incredibly beneficial to Bitcoin's price in the long term. And that's why I remain very bullish on Bitcoin in the long term. I think a lot of people underestimate how long this positive price action might take, but I do think that over the next 12 months, we will see new all-time highs on Bitcoin and on the S&P 500, because no matter what type of weakness we end up seeing in the economy, thanks to the labor market or whatever it may be, we know the only solution governments have is national debt expansion and money supply expansion and inflation, which of course is going to put upward pressure on risk assets. But anyway, it feels so good to be back, and it's so nice that we can finally update this chart and that Bitcoin has finally hit this possible level that we've talked about for months and that so many thought was impossible. So for now, we wait to see if that was the actual low or if we're going to get the amazing buying opportunity of buying in the yellow box in the low 40,000s, which is also the price where Bitcoin ETFs went live. So a retest of that area would be an incredible opportunity, in my opinion. I just don't know if we get it, but I will definitely take advantage of it if we do. But anyway, let me know how your past 2 weeks have been. Did you get wrecked in altcoins or on leverage, or have you been patiently enjoying your summer? But anyway, it feels really good to be back. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.